welcome to this special show on the Flipkart-Walmart deal. This is a special show that we're doing this evening because we are just days away from an official announcement of this mega deal in the Indian e-commerce space. Now, we reported last week that this deal is just 1 to 2 weeks away, and going by that timeline, this could be announced anytime next week. That's what we are picking up at this point. Now, Walmart has offered to buy as much as 86% in Flipkart. But from what we understand, they could end up with a 51% stake. Now, this deal is happening at a valuation of $18 to $20 billion. And as part of this deal, some of Flipkart's biggest investors are likely to get a major exit. So if you look at Flipkart's big investors at this point, Softbank owns 20%, Tiger Global, a hedge fund, owns 20% as well. They are expected to divest a major portion of their stakes as a result of this deal. The other investors, of course, include the likes of Tencent, eBay, Microsoft, Naspers, Axel, a long list of investors. When this deal happens, this is really going to be a landmark deal for the Indian internet space, for the Indian e-commerce space, because it will mark the coming of age for Flipkart, which has always been the poster child as far as the Indian startup story is concerned. Founded less than a decade back by Sachin and Binny Bansal as a book e-tailing venture, Flipkart went on to become India's biggest e-commerce company that's now going toe-to-toe with Amazon. There are, of course, conflicting reports every day about who has higher share. A lot of industry analysts tell us Flipkart perhaps has the edge at this point, and with a big strategic investor in Walmart, it will only add to Flipkart's heft. Interestingly, this also comes at a time when Walmart's been fighting a major battle in the US with Amazon, because Amazon is getting into Walmart territory there in online as well as offline through their acquisition of Whole Foods. So the Flipkart acquisition is expected to give them a huge fillip in a market like India, which is literally the last big growth market for internet companies. But on what this deal means, on the flip side, does it mean that the startup India story in a sense is nowhere, because this is technically going to become a battle between two American giants on Indian soil? What does it mean from an investment perspective, from an entrepreneur perspective? We have a special discussion lined up for you this evening. Joining me on the panel are TCM Sundaram, the founder and managing director of IDG Ventures, a very prominent venture capital firm in India. Interestingly, IDG is a shareholder in Flipkart through their sale of Myntra, in which IDG was one of the key investors. We also have K. Vaideshwaran, India's first e-commerce entrepreneur who founded India Plaza many years back. He recently wrote a book as well on the lessons that he learned from that e-commerce journey. We also have Arvind Singhal from Technopack to really give us the analyst view on the show this evening. Thanks so much, all three of you, for joining us. I'm going to start with you, Mr. Sundaram. I know you do not want to talk as a shareholder of Flipkart, but broadly, considering all of us have been reporting on this deal, it's barely days away, a week away. What significance does this deal have as far as the internet ecosystem, startup ecosystem is concerned? Because it's clearly going to be a landmark deal, whether you look at the scale, whether you look at Walmart's interest. What do you make of the significance of this deal?
In a way, this is a very good thing for the investors who invest in Indian e-commerce or consumer businesses, that you can build a very large business and get it sold and find an exit at a very large value like what is being talked about. So I think this is very positive from the investor's perspective. But another perspective that you may want to look at it is, will India build independence, or will Indian companies be acquired by global companies? Only time can tell.
That's an interesting point you've raised there, Mr. Sundaram, and I am going to come back to you on that second part that you raised. Will India be a playground for global rivals? Can it build its own companies? But let me bring on the entrepreneur turned author here, Mr. Vaidishwaran. Sir, as an entrepreneur, what does this mean for Sachin and Binny Bansal? Should they be happy that they've been able to build a business, scale a business, and then find a huge strategic investor for Walmart? Or, is this somewhat a bittersweet moment because they had to do this because the battle with Amazon was clearly becoming untenable? What do you make of this from an entrepreneur perspective?
I think from an entrepreneur perspective, it is a good sign. Also from the startup community, it shows that it's possible for entrepreneurs in India to start companies and then create a scale that is attractive to large global giants to come and make acquisitions. From the founder's point of view, I think it is good because clearly, the battle was not just becoming untenable. I think they were reaching a stage where I'm not sure they were really going to win the battle any further because they had raised all the money they had to raise. I think they were executing as well as they can. It's just that they're up against somebody who's so relentlessly good at what they do that you needed some magic moment to change and see if they can get ahead. So perhaps in that sense, it's good because in my view, they'd probably reached the end as far as the battle with Amazon is concerned. From an execution point of view, they may have still raised a couple of rounds, but I think they needed something different, and hopefully in that sense, a Walmart acquisition will give the brand a chance to continue to remain competitive and keep the battle going. So I think the good thing is they managed to keep this going for such a long time against a big global giant and come out quite well. That's a very good sign.
Right. Mr. Arvind Singhal, this is not Walmart's sort of first foray where the Indian retail space is concerned. They, of course, had that JV with Bharti, which did not work out too well. And now, after a long time, they're finally sealing this deal with Flipkart. In fact, talks of this deal with Walmart started way back in September 2016. I mean, that's when we started reporting this first on the channel because there was intense speculation then, almost 2 years back, that Walmart and Flipkart are engaged in discussions of some sort. But a few months later, you saw that mega investment for Flipkart coming in from Tencent, eBay and Microsoft. And now finally, after many months of negotiations, I guess Walmart has finally decided to bite the bullet. So in a sense, will Walmart be second time lucky? And this is also going to be a crucial battle for them because they will again go head to head with Amazon, something they're already doing in the US. So analyze this part for us. Is this going to be the second big retail, e-tail experiment as far as Walmart is concerned?
So let me first address the first point first, the relationship with Bharti. Let us not forget that India has got one of the most complicated, convoluted rules on foreign direct investment in retail. And it unfortunately continues to be so despite many attempts being made by the various governments in the last 10 years to simplify, but they have only complicated it more. So my understanding is that as far as the divestment of Easy Day is concerned, that was more on account of the government's policy that the wholesale company could not supply to the retail company more than a certain percentage of the business there. And therefore, it became untenable for Walmart to continue the Easy Day operations even with the partnership with Mittal. So I don't think it was a question of a problem between the two partners. I think the government regulations came in the way. Coming to Flipkart, again, I think Walmart will be faced with a lot of challenges when it comes to government policy to do with FDI in retail as such. So in that sense, it is not going to be a straightforward, acquisition of a brick and mortar and online or omni-channel. Walmart in India today cannot sell to consumers directly. As far as Flipkart is concerned, it is treading a very thin line between what constitutes the legitimate retail FDI versus what could cross the government line there. So it's not going to be easy from a regulatory point of view. Having said so, the point is absolutely valid that Indian retail market is one of the large retail markets and relatively untapped from the point of view of organized retail. We're talking about a market which is currently about $750 billion, and of which less than 10% is what you would call is in any kind of modern. So there's a lot of headroom to grow for players like Walmart and many others as well. Having said so, I think in this case it will be Walmart which will be on testing in some ways as to how they would drive this acquisition if this acquisition were to go through. Flipkart has already demonstrated that they can reach this far through a lot of entrepreneurship, but I think the hard work now in terms of making the business profitable and operationally viable is the big challenge for, I would say, Walmart at this time.
Right. Mr. Singhal, a quick follow-up question there. You said there will be challenges here as well. And, the Flipkart structure itself is pretty convoluted because they are headquartered in Singapore. They have various back-end entities for logistics. It's structured in a pretty convoluted fashion, and some people we've been speaking to said that perhaps contributed to the delay in closing this deal. So, fair to presume that whatever Walmart will be doing, the secondary share purchases, will happen from the holding entity in Singapore?
Quite possible. I'm not an expert on the legality of how the structure would be. I just wanted to flag this point that even if this investment were to happen from Walmart to Flipkart, I would not be surprised if I find the government of India also coming into some kind of action on this. And therefore, to get the regulatory approvals or permissions, whatever might be needed, would be another area we should be looking out for. It's not a straightforward private equity or a global fund investing into Flipkart. In this case, it is a retailer, even though the retailer might be investing through a investment arm. But we know that government can complicate things, and I would not be surprised if they do so in this case as well.
Right. In fact, Mr. Singhal, when we had reported this last week, I think the deal next week will be announced subject to regulatory approvals because a CCI approval will be mandatory. And I think the CCI approval is a reason why some of Flipkart's investors felt that Amazon will be an unviable option, because that would have created an internet monopoly in India, which is why Walmart always seemed ahead of the game. Despite, reports of Amazon offering a breakup fee, they entered the field very, very late, whereas Flipkart was engaged with Walmart for many, many months now. But coming back to you, Mr. Sundaram, you raised a very important point on what this means on the flip side. Where is the India startup story here? This is going to be Amazon versus Walmart versus Alibaba through Paytm competing for the share of an Indian consumer. So are the fears of, India being a digital colony of the West playing out here?
I think there are quite a few Indian startups which have grown substantially from a zero start. Now they are category leaders, both in online and offline. Some of them have acquired offline players like FirstCry, which has acquired Mom and Me. So I think the way we look at it is, India is a large consumption market. There are companies which are disrupting that market in various ways, including from digital or new retail formats. So I think new brands are getting created. So I wouldn't go to the extent of saying is India becoming digital colony, because you still have global players like Uber who are behind Indian company like Ola, and jury is still out.
Mr. Vaidishwan, can you weigh in on that point as well in terms of digital colony? Mr. Sundaram seems to think that there are Indian startups doing their bit to build companies for India, but are we seeing this play out increasingly, and not just the e-commerce segment? We saw this play out in the payment space as well recently, where people like Vijay Shekhar Sharma, PhonePe's Sameer Nigam raised serious concerns about the leeway that WhatsApp was getting when it launched its payment feature. So are we seeing this play out in multiple segments where perhaps Indian entrepreneurs feel that they are getting a raw deal compared to their foreign counterparts who come with deep pockets?
Yeah, Chandra, I'm actually tempted to answer no to the question, but I think the reality is yes. The way I think this will play out is, it's not that India is just a large consumption market, which it is. It's also the largest consumption market which has not yet been called out. And that's where the battle is being fought so intensely. It's not China, it's not US. I mean, the leaders in most of these large countries have already been established. People have taken their share, but India continues to remain in that sense virgin territory. People can still come in and become category leaders if required. So it will continue to attract massive attention from global giants, which is what we are saying. I think the way, if you look at the Indian startups, you can see there are 2 or 3 groups. There are the large startups who have raised a lot of funds, created a huge scale, but are not yet sustainable from an operation point of view. In other words, the operations continues to be making huge losses and requires constant funding. Now, when that happens, there is no choice but to keep raising funds from overseas people who come in and thereby become large shareholders. So you can call it a digital colony, but the fact of the matter is, when you create such large loss-making entities, Indian funds will not have the appetite to fund those losses. So there is no choice for them but to raise money from foreign sources. And when that happens, in a sense, you will actually give away the management control. A digital colony is one word. On the other hand, you have startups who are building small organic businesses, growing slowly, steadily, hoping to create sustainable operations. They're probably not talked about so much every day in the media, but I think these are the operations that over time can actually become sustainable, and in that sense won't necessarily be gobbled up very easily by a foreign brand or a foreign investor or a large global giant, and thereby perhaps all will not be lost in that sense, and maybe some of these companies can go on to not just become self-sustaining independent brands in India, but won't cede control and become part of the digital colony. So I think on the face of it at this point in time, the answer seems to be yes, simply because the large companies have become such unwieldy from a financial operation point of view. There is no choice but for foreigners to come and take control of it. But I'm hoping that these will be countered by smaller startups who will build more sustainable operations, and maybe over the next 10 years you will see more Indian startups who are actually able to sustain independently, and everybody will not become a digital colony of the West.
Here's hoping we see that play out, but requesting all our guests to stay with us. We'll take a very short break at this point, but when we come back, we will analyze what this means for you and me, the consumer. Are we going to see some of those deep discounts perhaps come down in the coming months and years? More on that after the break. Welcome back to the special edition where we are decoding the soon-to-be announced Flipkart-Walmart deal right here on ET Now. I'm going to go back to the investor we have on the show this evening, Mr. Sundaram. So, before I get to the consumer perspective, what does this deal mean from an exit perspective? Because for long, people have complained about how difficult a market India is when it comes to exits. And whenever Flipkart raises a mega round, it immediately has some ripple effect when it comes to follow-on rounds or investments that other startups are raising. So do you see that happening this time as well when the deal is announced?
No, absolutely. I think that is a very clear positive which comes out of this, because many of the limited partners who invest in funds like ours, one of their key concerns used to be that India does not generate large exits. This will prove that actually you can build a large business and create a large exit, and so they will become more confident about investing in funds in India. And India, it's a secular growth story in terms of the $2 trillion economy going to $5 trillion and $10 trillion. So the market opportunity is going to grow. So within more investments coming in, there's more opportunity for startups.
Mr. Vaideshwaran, do you expect any strategy change with respect to, the discounting trends that we've seen or the categories that Flipkart focuses on? It's been very big on electronics, mobiles, it's done very well there. What changes do you see from a strategy perspective with a big investor like Walmart coming in? Will there be more focus on grocery now? That's something that CEO Kalyan Krishnamurthy has spoken about in the past as well.
Well, I'm assuming there will be certainly be some key changes in the category approach if and when Walmart comes into Flipkart. Grocery is an obvious answer. I think the way I would look at it is, on the face of it, there are, I don't think all is going to be very easy as far as this deal is concerned. So while we've all been talking about the good things, about the exit and the startup and environment, I think there will be challenges here. It won't be so simple. First of all, I think Walmart's strength has not been in the online space. I mean, they went into China, they acquired a small company, they tried fighting Alibaba, they didn't, so they went back after a few years, put some money into JD, but they didn't make the kind of progress that they would have wanted against Alibaba. In the US, they've been making significant investments in the online space for the last so many years. They've not dented Amazon at all. So in that sense, India looks like an opportunity. But both China and the USA, they have a fundamental advantage. Walmart comes from a very strong offline retail background. So their strength in digital would be to integrate their digital assets with their offline assets and hopefully produce an execution and an operational story that will compete effectively against Amazon. In India, that's not going to happen. One, because they don't have any offline presence, and given the FDI rules, I don't see them actually building any offline chain of any value over the next 10 years at least. In which case, what they're essentially doing is they're betting big money to come in and compete for less than 1% of the retail market, which on the face of it sounds very, very strange. I'm not even sure why they were doing it, because I don't think it will make any sense for them. If Flipkart already had a very strong offline integration, or if Walmart is coming in and planning to integrate the Flipkart digital operations with another offline play, and that's not very easy given the FDI rules, then I think it makes sense, because on the face of it, I think it's going to be very complex. Like they're jumping into the market, they're going to compete with Amazon, but I think fundamentally it will go against their strength, which is to execute very well, integrating offline and online. That's not going to happen in India. So I think it won't be as easy as it looks.
Right. It won't be easy as it looks. Mr. Singhal, I'm going to let you have the last word very quickly, sir. What will this mean from a consumer perspective? Is the era of deep discounts here to stay? Will it go away now that we have a three-way battle between Walmart-owned Flipkart, Amazon, and of course Alibaba-owned Paytm?
So firstly, I don't think the discounting is going to go away in any time. On the contrary, with the Walmart-Flipkart combination, I certainly expect Amazon to be even more aggressive than they have been in recent times. Alibaba's strategy we do not know yet in terms of to what extent they want to commit themselves to India. But I would also not rule out Reliance being a significant player in the years to come. To me, Reliance looks like a dark horse in this case. They may not be that big in e-commerce space as of now, but the kind of platform they're building and the kind of physical retail presence they have already on the ground, they're not constrained by FDI regulations at all. So I don't see that it's becoming a duopoly in any case. Walmart and Flipkart together and Amazon itself will have a big fight to each other. Alibaba certainly probably, and then Reliance. So for consumers, I think they will have enough choices and enough value as well in the years to come. So there is no reason to worry from a consumer's perspective, in my view.
Right. Interesting view there, especially on Reliance. Can they do to e-tail and e-commerce what they've managed to do in telecom? Late entrant, but managed to really disrupt the entire space with their strategy. We'll have to wait and see if that manages to play out in e-commerce and if there is space for a fourth player. But on that note, completely out of time in this special show on Walmart, Flipkart deal. Thank you to all our special guests on this panel for decoding this for us from various angles, and we will be bringing you more coverage on this issue in the coming days as the deal is expected to close barely in a few days. Next week is what we hear, but let's see if this happens before that. On that note, thanks so much for watching this special show, and keep it with ET Now for news and updates.